Choksey as well joins in on the show right now. Deven, hi, afternoon. This is not the way you would want to have, headed further into the festive season with this kind of a market. Will you think soon everything is going to abate? Because, like we were just contemplating right now, the reasons were already there. Why this sudden knee-jerk reaction then?
So, Aisha, good afternoon. Well, I guess I think Nikunj has summarized aptly, I think, the entire subject about how FIs are taking out the money. And in the domestic market players, I guess I think the situation is basically they are writing losses at this point of time. And as a result of it, they are required to sell some part of their portfolios to pay off the sharp mark-to-market difference which is coming up on some of the holdings, including, I think, some of the mid-cap, small-cap companies. Over there, the fall has been quite sharp and acute, and I think a large percentage fall has come. So certainly, I think we are basically going to see this pain continuing. And I think this particular fall, definitely though people have a lot of money to invest in, but this particular fall would probably, I think, will have to be waited for some more time for a variety of reasons. One among them very particularly would be how exactly the domestic investor stabilizes on his losses, because I think the options market, even putting into the derivatives market, the amount of money that he has to write check for the mark to market will probably, I think, put pressure on the market. On one side, the FIs are not there in the market to buy. The domestic investors, mutual fund is selectively buying the cash market stock. And the traders are writing down checks for the losses that they will get. So this is where probably I think we are going to see technical adjustments continuing in the market for some more time.
What's worsening it perhaps, Nikunj, is the fact that you don't have any FI cushion, right? I think barring that minuscule of a figure that you had on Friday evening, they've been consistent sellers.
So Aisha, Indian markets thankfully is no longer this one-trick pony where you would look at a fair weather friends every time there is bad news.
It's not, but had they been buyers in the last 1 month, you would have some more cushion.
Of course. So now you could ask yourself, is that they were sellers, will they continue to remain sellers and will they increase their selling quantum? See, the story is very simple. DIs are buying, retail is buying, FIs are selling. Now, how much more can FIs sell? I don't think they will come back in a hurry. Looking at the bond deals and the global setup, you will only come back when the dust settles down or valuations become attractive. Then retail guys would say, okay, I don't care. I care about the mid and the small cap stocks. They are doing okay. And then the HNI brigade, where sliver of the market is actually cheap now. So whenever you go in a market, in the near term, it's sentiment, which is slightly sticky. In the medium term, it is liquidity, which is getting difficult to predict. And then in the long term, it is earnings and it is the trajectory of the economy. So 2 out of 3 things are comforting. But the short term, which is a function of sentiment and compulsion and algorithm-based stroke technical selling, that is not with you. And it's a brute force of selling which will break the back of the market. So you should not be in a hurry to buy. Kya jaldi hai? Let it settle. I mean, there is no point in trying to be a compulsive buyer. That's my limited point.
Yeah. Deven, what's the strategy here? I mean, try and take some chips off the table, protect your portfolio, or do you think it's time to go contra? Because, unfortunate as it may be, the stock returns are where there is growth and growth visibility. The contra call has to be then taken in the bottom-up stories, which are not performing right now. I mean, IT, chemicals, some of the individual private banking names.
So in some of the fundamentally growth-oriented stories where we are maximum convinced, I think we have been waiting for this kind of a fall to come in the market because this fall is not going to, I think, take away the program of these companies delivering results. So certainly, I think the values are going to become cheap if that all this fall continues, and that would be the time to buy. Fortunately, in our funds and with our investors, I think we have kept a significant amount of cash in the portfolio. This kind of a correction definitely, I think, brings up the opportunity to buy. So we may not buy all at a time, but I think selectively in some of the stocks, I think we would like to buy in this particular fall.
Sure, Naresh, what's your view? What's the best tactical trade that you would suggest at this point of time? Index level, anything stock specific?
So on an index level, cut the long positions, wait for the markets to correct a lot more. Say, let us check whether it breaks 19,200, 300 mark over the next few sessions as well. So the tactical traders to create some bit of short positions in specific stocks. So something like a Birla Soft or some of the IT names which are yet to correct. They've done really well. So there could be some correction over there and wait out. At times, doing nothing is a good trade.
Kunal, 19,273. Same time last week, we were discussing that the path of least resistance is on the upside. Has that reversed to the downside now? Are we looking at more pronounced downside? And in this selling, it could be 18,000, sub 19,000, 18,500. Are things looking dangerous now?
Yeah, things are looking critical for the indices, Nikunj, because you know what we've done today is we've managed to break below a major support. And I call it as a major support because it was formed by a series of 4 gaps which was created at the 19,300 mark. And that is what we were waiting out for over the last 1 month. So even last week, for example, when the Nifty closed, we were almost at 19,500 approximately for the Nifty. And for the last 1 month, we've been just fluctuating into this band of 19,300 to 19,800 broadly. So which means 19,500 was more of a pivot for the Nifty. I think after today's break of 19,300 mark, and seems like we would probably be closing below this level, this could probably be a decisive breakdown for the index. And even if you look at the range of this 500 points for the index where we were fluctuating in the last 1 month, even if that range gets replicated on the downside, we could be looking at 90,300 minus 500, which is closer to 18,800 for the index, maybe in the next 1.5 week.
And Kunal, banks looking the most brittle, or would it be some newer sectors like today you're seeing metals crack the hardest?
So in fact, for a good part of the day today, banks were not as weak. I think except for the last half an hour, last 1 hour, where the selling has been a bit more pronounced into the banking stocks. It's actually the metals which have fallen by more than 3.5% and some of the other smaller cap, mid cap names. In fact, the mid cap index in the last 2 days has also corrected by more than a margin of 5% odd broadly. So I think the pain is more towards the mid cap end of the market as well as into few of the high beta sectors. I don't expect Bank Nifty to correct very, very sharply because Bank Nifty is already retraced towards the 200-day moving average. So just to give you a brief understanding, the Nifty, the 200 DMA for the Nifty is at 18,600 and we are almost at 19,250 for the Nifty, which means we have a cushion of 600, 650 points. Bank Nifty is already corrected to those levels of 200 DMA.
Okay. Tell us give us an example of your top 2-3 holdings or 4-5 holdings which you would be only looking at adding. Now it's a 5% decline, 10% decline, that's a judgment call and that's a market timing, but you are absolutely clear that this decline is something you've been waiting for and you should be smiling because the decline has come. Has rahe ho Deven bhai, correction aa gaya. It's only market when prices go down, investors they feel happy. Navratri spirit थोड़ी तो होनी चाहिए, चल हंसो.
Yeah, Nikunj. I think थोड़ा तो ऐसा है कि I think in this particular market ये जो fall है, we feel that I think this particular fall is basically giving us the opportunity to buy into some of the stocks I think which we are holding. We have been holding companies like Bajaj Finance, Bajaj Finserv. We've been holding companies like Reliance and Reliance Jio Finance, I think, after the demerger. So all those kind of companies, including Tata Motors, they've been holding this kind of stocks. And any corrective fall in these particular stocks, we feel extremely confident to buy further into the portfolio from these particular companies. Some of the at current levels, I think the upside is limited. But moment this particular fall came in, and if this fall further accelerates, then possibly I think you are likely to get it. If you end up getting, I think at capitulation level, the stocks probably you are likely to get 15 to 25% kind of upside in the next swing, which happens I think in subsequent course of time. So we would be comfortable buying and adding these companies into our portfolio because we feel fundamentals are not changing, and on the contrary, they remain stronger enough to I think bring the portfolio up from this companies.
Yeah, the fundamentals are not deteriorating, and that is something that you can also fathom from the kind of 10-year moves that we have seen. And Somit has helpfully culled out this data that from October 9 till now, there has been an increase of almost 22 bips when it comes to the US 10-year yield. So, when you stare at around 9th of October, the US yields were perhaps around that level of 4.75. That's breached 5% now. Indian yields, if you look at it, they have hardly changed even 1 bip right now. So from 7.38, they only went up to 7.39, and the UK 10-year has also seen a sharp move in that time, up almost 26 basis point within a matter of 20 days itself. Deven, what does this tell you? That of course the Indian economy is much stronger, and ergo you should look at the domestic consumption themes?
Nisha, I think if you practically check with every company, I think they are all basically sitting on a very huge amount of, I think, business for execution, be it in the engineering space, be it in the service sector, or even those sectors which are primarily connected with the primary sectors. I think everywhere probably you are seeing the huge amount of order book in the place and the demand situation continuing. I don't think that this demand situation is going to go away in hurry in next 1 or 2 quarters. So that is one area where probably I think you feel more comfortable adding stocks in your portfolio. Second most important aspect is that I think so far so good. I think the inflationary pressures have not affected the margins of our companies. Though I think because of the values not going up, the sales have remained little tepid, but the margins have remained actually strong. So we feel confident that if the input cost is not going up in hurry, then possibly I think the companies would be able to maintain the margins. So we are not very sure about the fourth quarter how this particular crude oil saga will play out. If it indeed becomes dirty, then probably I think we'll have a challenge in the fourth quarter. But at least in third quarter, the results are likely to remain relatively stronger for most of the companies as we see.
19,270 and now even dipping below that level. Naresh, let's revisit your Nifty strategy given that tomorrow unfortunately is a trading off and then you've got expiry on Thursday.
So stopped out on the longs, not taking a short here. The risk reward is not great. So no trade is the strategy on the Nifty at current prices.
Okay, let's take in some BTST ideas as well, or is it going to be STBT, Naresh?
So a mix of sell and a buy. Sell on Birlasoft, the stock seems to have topped out in the short term. Stop loss at 537, target price of 515. Second is a buy on UBL, which has been trying to hold on through the whole day. Stop loss at 1620, target price of 1670.
What about your strategies?
So it'll be two sell calls. First one is a sell on trend. The stock seems to be on the verge of breaking below major support of 2000. So targets of 1900, stop loss at 2050. And Tata Com is also another stock which has fallen very sharply today, broken below the 50-day moving average. Expecting a second round of correction into the stock price. 1580 as a target, stop loss at 1660.
Okay, a lot of blue chips are actually taking it on the chin. LTI Mindtree down about 4%. You also Adani Enterprises down 3.5%. UPL, some of these metal names, Hindalco, JSW Steel. So a lot of these global facing names, whether IT or metals, are the ones which are seeing sharp cuts. And not just that, from the broader markets as well. If you look at the F&O vertical as well, a lot of stocks like PVR, etc., Indiabulls Housing are not doing well at all. SJVN, the darling of that, entire mid-cap rally, suddenly seen a cut of almost 13%. BEML, Star Cement, RCF, these are some of the names which have easily seen a cut of almost 10% today and no incremental news flow as such. Just quickly, let's take stock of the financials as well, Deven, because that was the space that was underperforming. Now, do you believe that given the entire, sentiment has reversed, maybe it's time to start looking at banking positively because the rest of the sectors are fairly overvalued?
Well, I think banks did not participate enough into the rally, and certainly I think majority of the banks have remained comfortably placed on the valuation front as well. Not forgetting that I think they are having the growth in their AUM, not forgetting that they have been able to attract the deposit at a lower cost and also maintain their margins. Given that situation, I would think that I think correction in the stock prices of some of the corporate banks, this could be I think a buying opportunity at every fall. Maybe I think one will have to selectively keep building the portfolio because generally these stocks are priced to perfection. And in a boom market, I think you don't get the headroom. Here today, after the correction, you might start getting some headroom in some of the select names like at DFC banks and even for that matter ICICI. We feel that I think any correction in the price, I think these kind of companies are worth adding into the portfolio.
Okay, while we're going to be off on account of the trading holiday for the Shara, there's going to be Microsoft as well as Alphabet numbers, and that's going to really weigh heavy on the US market sentiment, as also, of course, predictably so, the NASDAQ too. In fact, the pre-market futures right now in the US are not looking that great. You've got a 200-point fall on the Dow futures. S&P 500 futures are currently down 0.6%, and it's a 121-point downtick that you're seeing on the Nasdaq futures as well, clearly indicating that tonight as well it's going to be all a sea of red when it comes to at least the US equities. Europe as well has started off on a back foot. In fact, within minutes, you've seen quite a bit of drift down come in for the European markets. Much like our markets, they started off just about marginally soft, but now you have a 150-point fall on DAX. FTSE is down nearly 1%, half a percent down for CAC, FTSE MIB as well soft, and Stock 600 as well, which is lower by a good 1% or so. So quite swiftly we've given up that 19,300 mark as well in trade today. And from the top of the day, I think the ticker is a telltale sign of how damaging today has been. Kunal, it's been a 300-point fall almost.
Yeah, 300 points. So, it was as if that the party got over sometime back and the bill was sent today to everyone. So, I think it's more of the mid caps and the small caps in the market breadth, which was holding up pretty well over the last 1.5 odd month, even though at a point when large cap stocks were under pressure, and we were consistently discussing the likes of Reliance as well as HDFC Bank being under major kind of a selling pressure. But the market breadth still remaining stagnant. I think that part has now reversed completely, and now we are seeing the market breadth more or less getting in line with the larger cap underperformance. So this could probably be a start of a trend on the downside. So we'll wait out for maybe another day of confirmation. But now 90,300 being broken is a point of concern for the markets over the near term.
Okay, point taken. And that bill which we've got of that party is quite hefty, clearly, and a lot of people are paying the price, because if you look at the mid cap and the portfolios, they are the ones which are bleeding today. So yes, the index has also seen a cut of almost 300 points, but I'm sure the portfolios are seeing it perhaps worse, because the individual names are seeing a lot of pressure as well. Just shifting focus in terms of the constituents of the market to see which are the major pullers and draggers at this point of time from the broader market. There are outliers. So Credit Access is still high by 8%. BSE is holding out. Ipca Labs, Rainbow, Children Hospital, MedPlus, they're all doing okay in an otherwise weak market. Even Aurobindo Pharma is going home with a bit of a green tinge. Deven, your sense as far as the pharma space is concerned, is there any name particularly that stands out as a buying recommendation?
I have looked at some of the results, and I think one of the interesting one which I found out was Laurus. Though I think the company has made on a year-over-year basis a significant fall in the profits, but on a sequential basis, I think the jump has been quite sharp as far as I think the numbers are concerned. And that makes me believe that I think probably the worst is over for the company, and situation maybe started turning slightly better. At least from the commentary with the management, I find that I think the underlying tone is becoming more and more confident. This could be the time wherein I think you take some contra decisions and contra buy actions in some of the quality companies where the fundamentals remain solid at the back, but for a reason I think they have not supported the company in the current workings. So for which I think one could possibly get an opportunity. In fact, I do believe that many of the pharma companies, including Divis, would be, I think, a right choice to make in this correct fall, I think, which is corrective in nature.
Well, quite a damaging day.